Hello and welcome to another daily dose of insights powered by Container Exchange. My name is Christian, and every other day we bring to you the key news, stories, and data points that move container markets and hence your business. Today it's Wednesday, so we have our Trading Wednesday. Today we mainly talk about trading data, trading trends, updates from the world of container trading. And I'm just going to share my screen to jump straight in. Three core topics here on the agenda for us today. Number one, a quick look at our Container Exchange Sentiment Index, which measures the sentiment across the container traders. We regularly ask and poll logistics professional, how do they expect container prices to develop in the near future? And then there's three potential answer options. Number one is increase, decrease. Number two is decrease. Number three is stay about the same. We basically, on this data, construct an index. Now, we see this Container Exchange Sentiment Index surging to an all-time high. You see the chart here. Since the beginning of this index, which was early February, we pretty much continuously traded in negative territory. So there was more expectation of decreases in container prices than increases. Since about end of March, this has turned into positive territory. And as you can see now, over the past couple of days, roughly the last week, this has been surging upwards to an all-time high to 38 points. Similar status as we had in the beginning of April, but the momentum is just very, very interesting here. And we are very curious to see how this continues in the upcoming days. Agenda point number two, also sentiment related. There is hope in the market that freight rates have bottomed out. There was a very, very interesting webinar by Drewry yesterday that looked at container prices and price developments. Basically discussing the market notion or the market sentiment that we might have reached the bottom. After continuous decline, we have now seen a few weeks of slight increases on the freight rate side. But Drewry, and we share that sentiment here at xChange and that opinion here at xChange, expect further decreases in freight rates in the midterm, mainly due to demand-supply mismatch. So we have still very, very, very low demand for freight capacity in the market. If you look at the latest CTS data, the numbers are just abysmal, even decreases compared to 2019, so before the COVID surge. That low demand coupled with very low scrapping numbers, so very few old vessels are being scrapped, and the incoming wave of new build TU capacity into the market, which just exacerbate this demand-supply mismatch and further depress freight rates. At least that's our opinion. Let's see what the future brings. And then a quick look at our Trading Insights product. Container Exchange Insights is a data product that lets you analyze container prices and price developments in more than 30 locations around the world, and gives you that access to that data, allows you to make better decisions. Now, a quick snapshot here at Shanghai and Houston, actually. So Shanghai is the light blue line, Houston is the dark green line. And what I want to call out here, of course, you see this is the last 12 months, you see the continuous negative trend, particularly in Shanghai. Houston has held up much more stable, similar to all the rest of North America. But what I want to point out here is that Shanghai now trades consistently below the global average since about October last year. So the zero is the global average here. It's normalized at the global average. And you see now Shanghai trading at about 10 to 15% discount to the global average. And very interestingly, this is also true if you compare Shanghai to the regional average, so to Northeast Asia, which is mostly Chinese locations. So what this means for us is that, and this is 40-foot high cube cargo worthy. So what this means for us is that there's just still significant surplus, particularly in the high container production area of Shanghai compared to available exports, even despite the significant uptick in GDP and growth in China that we've seen in Q1. So very, very interesting trends here. Might also be a good opportunity to start buying containers in Shanghai and hoping that prices will recover here, but that's of course a speculative bet, and there's no suggestion for investment here, just pure information facts. Cool. That's it from us for today. I'm just going to stop sharing my screen. Thanks a lot for watching. Thanks a lot for tuning in. Follow me for more of this content, and check out containerexchange.com/insights for more information about our data insights product. Until then, talk to you on Friday. Have a good rest of the week, and see you soon. Take care.